Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Burger, whose current price stands at the $2.653 mark, and here on TradingView the market is down by 11.64%. And in this video I want to give the key scenarios that I expect to play out on this chart, and I'll be basing my analysis on the Fibonacci's, the key areas of support and resistances. So if you're interested in such content, make sure that you stick around till the end of this video. I'll kickstart the video by sharing a pattern that I had on this chart, which is now being invalidated, and that pattern was a double top, and you can see it over here because the price had been moving to the upper side very impulsively, touched that area of resistance, then we had a pullback to the lower side, then had another bounce to the upper side, touched that key area of support of resistance, and I expected the price of Burger to give us a bit of a pullback to the lower side, or maybe a consolidation. Then we can lose those key areas of support back to this area down here. That is the pattern that I expected to play out, but you can see that pattern has now been validated by breaking to the upper side of that key area of resistance. We broke above it and even went to the other key area of resistance at around the $3.41 mark. Now that that move has been invalidated, we need to get it out of the charts, and I also had a target area once we break above this key area of resistance and have a retest of that area. But yesterday you can see that we didn't manage to have a successful retest, and that would mean we have started unlocking even lower prices because that resistance was not a success, so we cannot continue pushing to the upper side. And I expected the price, once it breaks this key area of resistance, to go to around the $4 mark, and that I was basing it on the trend based fib. So if I apply the trend based fib once more, you can see it gives me a target area at around the $4.122 mark. So that's what I expected once we break above this area of resistance and also have a retest. I expected us to go to that target area up here, but at the moment those moves seems to be invalidated, and we need to have another key scenario that can play out. That brings me to the first possibility that can play out on this chart, and the very first one is that we can continue pushing to the upper side, because you can see that we are having a bit of a recovery in the market. And once that happens and we get back to this key area of resistance once more and maybe break above it, it's possible that we break above it and also have a retest. And once we have a successful retest, that will give us support to continue pushing to the upper side and break above this key area of resistance between the $3.42 mark and the $3.34 mark. And once that plays out, then we can get back to my target area up here at around the $4 mark. And it's also possible that we can try to break above this key area of resistance, we get rejected, and have a massive pullback to the lower side, and that pullback could take us to around the $2.18 mark, where we have our next key area of support. And if we find support, we can then bounce to the upper side, and it's still possible that we might lose that key area of support and continue pushing to the lower side. In this move to the upper side, we can try and use the Fibonacci's to get a target area for this wave that is in formation at the moment to the lower side. That is this retracement to the lower side using the Fibonacci's. So if I apply the fibs from this low that we have down here to that high that we made yesterday, the minimum that I'll expect this wave in this retracement to the lower side to do is the area between the fib level 0.618 and the fib level 0.5, and that is between the $2.317 mark and the $1.933 mark. So I'll be putting another yellow target here on the chart, that is between the fib level 0.618 and the fib level 0.5. That is the minimum that I expect this retracement to the lower side to do, and that would mean we might be unlocking even lower prices and maybe lose this key area of support that we have at around the $2.2 mark and the $2.0 mark. So those are the key scenarios that I expect to play out. If I also take a look at the indicators, here on the RSI we are trading at around the 52 mark and that would mean that we have room for us to continue pushing to the upper side. If we have that breakout to the upper side, we also have that room for the downward possibility. So if the Fibonacci is respected, that move to the lower side will be accommodated on the RSI. Here on the 4-hour MACD, you can see that we have printed a bearish cross and we are seeing an increase in the selling pressure, and that would mean lower prices might be coming our way. Here the move that I have explained using the Fibonacci is the most likely move to play out. So I'll keep you updated on any movements on this chart.